We all know that a mortgage or a home loan is a financial instrument. Specifically, a mortgage or a home loan is a debt instrument which is secured by collateral, specifically real estate. We all know there's different types of mortgages. However, do you truly understand the impact that the rate has on a mortgage? My name is Kevin Martini, and this episode of the Martini Mortgage Podcast is called Mortgage and Home Loan Rates.
This is the Martini Mortgage Podcast with Kevin Martini.
I have some breaking news. Home loan rates are historic right now. In fact, they are downright epic. Let me get personal for a moment. When my wife Ronnie and I purchased our first home, the rate was in the mid-nines. Yes, you heard me correctly. The rate started with a 9, and that was not even for a fixed rate mortgage. We had an adjustable rate mortgage, which is also known as an ARM. Essentially, an ARM is where the fixed rate is fixed for a brief period of time, and then when that time expires, the rate could go down, which is possible but not likely, or it could go up. Now, here is what is hard for so many to understand. My wife and I were so very excited to have a rate that started with a 9. Today, for many, a 30-year fixed rate is more than 50% less than when my wife and I purchased our first home. Right now, it is like the Friday after Thanksgiving in the mortgage world. It is the Black Friday of mortgage rates. The developing story right now is not about where rates are, but about what the current rate environment allows one to do. Let me expand using data from Freddie Mac's primary mortgage market survey. In the fall of 2018, mortgage rates for a 30-year fixed rate mortgage were below 5%, but greater than 4.75%. At the time of this recording, they are over 1% less. So essentially, a $315,000 mortgage that was secured in the fall of 2018 to buy a $350,000 home that you put 10% down on today would actually be $200 less expensive every month. It is critical to highlight that the objectives of a home buyer are materially different than the objectives of one that is selling a house. A seller is concerned with the short-term direction of housing prices, where a home buyer should be concerned with the long-term cost of that home. Home loan rates impact your long-term costs. You know what else also does? Home values. Right now, homes are still affordable, and they are very affordable when you consider the current home loan rate environment. But why do I use the word affordable? If one would look at the payment for the home as a percentage of the income for a family, according to the National Association of Realtors, the historic norm is over 21%. In November 2018, it was 17.3% of the payment as a percentage of income. Since it's below the norm, it was affordable then. Today, based on the most recent data, which was available at the time of this recording, it is very affordable because it only takes 15.7% of the income to pay the current payment. You need to keep this on the radar. The two things that impact the cost are the price you pay for the home and the cost of the mortgage. Now, according to CoreLogic, the forecasted year-over-year change in price in North Carolina will be 4.4%. Nationally, the forecast is 4.5% year-over-year change in price. So waiting to buy does not make sense, but I get it. You think there's a recession coming. Well, let me share with you this. You are 100% correct. A recession will rear its head. It's not if it will happen, it is when it will happen. However, in modern times, excluding the Great Recession, 3 out of the last 4 recessions, home values went up. One of the 5 Kevin Martini benefits to home ownership is that owning a home is a hedge against inflation. You see, inflation normally rears its ugly head during a recession. And again, owning a home is a hedge against inflation. Did you know that the median asking rent has gone up every year according to data from the census? In 2010, the median asking rent was $698. And in the second quarter of 2019, it was $1,008. And that is about 7% higher than it was in 2018. If you think renting's going to get cheaper, I think you're wrong. If you think mortgage rates are going to go higher, you may be onto something. But when will they move higher? Will they remain low for the balance of 2019? Will they be low through 2020? I do not know, but I do know that right now the current rate environment is epic, and the only guarantee is where home loan rates are right now. The current home loan rate environment provides steroids to your buying power. Simply put, right now, a prospective home buyer can likely afford a more expensive home than they thought, or the home they wanted to buy is less expensive monthly if they need a mortgage to get that home loan. Every eighth in rate movement impacts your buying power. When it goes up an eighth, your buying power is eroded just a little. However, when it goes down, it has a positive impact. If rates move by 1% lower, and they have, your buying power is amplified by over 10%. Check this out. Recently, I helped a family that wanted a $1,500 principal and interest payment. They were able to buy a $400,000 home. If they purchased a home a year ago and they wanted the same $1,500 payment, they would have only been able to buy a $375,000 home. For illustration only, let us assume that the current rate is 3.5%, and let's assume it goes up to 4.5%. That means your payment will go up $84 for every $100,000 borrowed. So if interest rates move upward and you're waiting to buy and want to secure a $300,000 mortgage, your payment would go up about $250 a month. If you've been waiting to buy or you've been waiting to move up, your wait should be ending. Right now, I mean at this moment, it is time to explore your options that you have available. Perhaps you've been waiting because you are concerned about down payment or concerned about your credit. I get it. However, I have found that people overestimate what is needed to purchase a home and secure a mortgage. There are low and there are no down payment options available with the Martini Mortgage Group with Benchmark Mortgage. There are even programs for folks that have bumps and bruises on their credit. I said it earlier in this episode. Right now, money is on sale, and the current rate environment allows one to amplify their buying power, and I believe you owe it to yourself. You owe it to your family to explore the options that are available. If you want trusted advice, if you want a custom home loan solution with a great rate and an on-time real estate closing while having a world-class experience, just give me a call. My name is Kevin Martini, and I can be reached by calling 919-238-4673. 4934. Thank you for tuning in, and I look forward to help you. If there is someone that you know that would benefit from this episode of the Martini Mortgage Podcast, please share it with them. And thank you in advance for leaving a 5-star review about this podcast.
The Martini Mortgage Group makes real estate dreams a reality with trusted advice in a stress-free environment with great rates and on-time closings while providing a world-class experience. If you or someone you know has questions about the current mortgage rates or the current mortgage programs, please reach out to the Martini Mortgage Group at 919-238-4934. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.